Hello to all traders and welcome back to another market review brought to you by Orbex. So looking at indices today after the Dow is looking for a V-shaped recovery from its November sell-off, where we saw that early indications of an AI and tech bubble about to burst. So we saw quite a big sell-off on the fears that this is going to happen. But since then, we've had a dramatic recovery because going into next year, we are expecting that these two sectors particularly are going to outperform once again, and there will be a big need for semiconductors, silver, and all the rest of it that goes along with creating AI and tech. So this is looking likely that this will keep on progressing. But now we're just looking towards the next peak, which is was the previous record high, and that was above 48,000. That's the next sticking block for the Dow at least, because if we look on the 4-hour chart, we're just seeing now slight consolidation after really bouncing away from the 46,000 handle. We're seeing now a breakthrough 47,000, and now just a little bit of a test at 48, which has become a firm resistance now. So just trading a few hundred points below that, but all eyes will basically be on the Fed's interest rate decision this week, which we'll obviously be reporting on, and to see if we get any big surprises from the Fed. Is there going to be more rate cuts? Is there going to be a more hawkish or dovish tone for the next year? And also, where does the Fed go as well? Is it going to keep on progressively cutting rates, or are they going to hold to see how the job status is, how the economy is in general, and that will reflect on the stocks and indices and the dollar as well as the metal market, which has been progressing nicely throughout the year, which we reported on yesterday. So let's just take a look on the S&P as well, because again, that's looking nicely to recover. It's from the November and end of most of November really of the sell-off that we saw. And as I said, this was just sentiment shifting and a progressive fear that we were in this bubble that was going to burst like we had 25 years ago with the internet and dot-com companies obviously going down. So we'll just wait and see if we have more and more of an upside or downside in that particular region. With these indices, though, the RSI and other stochastics are vastly overbought, so we could be seeing a slight pullback, which we're seeing now on the intraday chart. But in the overall spectrum, we are expecting another test at this particular high, roughly around 6,900, which is just a few points short of the recent peak that we saw in recent sessions last Friday. So we'll wait and see what happens. Obviously, as I said, the Fed is the main driver for the last 6 months, well, actually the last 12 months. If you look at the charts going all the way back from its interest rates, they're looking at inflation, they're looking at jobs data. Obviously, the US government shutdown finally ending, things are getting back on track as well. So we'll wait and see what is next for the market in general. Are we going to see out this year with no more surprises? And are there any other big volatile moves in store for the next couple of weeks until we get to the end of the year? We'll have to wait and see. But as always, we'll bring you all the latest in fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.